There we go. All right, so first thing we're gonna go over is candles and what candles are, okay? So a candle is these weird looking things right here, okay? They're little blocks with these little lines. So these little blocks are called the body. These are the body of the candle. This is where price is going to open and close, okay? And the wicks are showing you where price went to, but it didn't stay there, it came back. Okay, so on bullish candles or buying candles, candles that are moving upwards, those are going to be green or we call bullish. Okay, these ones open low, open down, go up because they're buying. So they're moving in an upwards direction. Okay, open, the close, and then this is where price went to, but it didn't stay there. So it reached this area, but then sellers pushed it back down, making it close here. Okay, same thing with the lower wick. Price went down here, but it didn't stay there. Buyers pushed it up. Okay, so same thing with a bearish candle. Okay, price opens above and goes low because it's selling. Price is moving downwards. So opens high, closes low. Same thing with the wicks. Price didn't like it there. Sellers or buyers came in and pushed it out of that area. All right, and then anytime you guys have any questions, please just let me know. I do like a lot of interaction or for you guys to ask questions if you have them. Okay, so that is what a candle is, okay? These are representing price where it's been in whatever time frame you are on in your chart. So if you are on your daily chart, each candle represents 24 hours of where price has been. Okay, the last 24 hours of where price has been. If you're on your hourly time frame, each candle represents 1 hour. 1 minute represents 1 minute. Shadows, yes, correct. Shadows are also known as wicks. Recto. All right, so that's candles. These are some important links to have. I would take a picture of this or a screenshot. If you don't have these websites, these are what you're going to want as like a favorite on your toolbar. If you're trading HFX, you're going to want to use these almost every single time you're going into a trading session. And I'm going to go over what they are. Okay, so your first one, you have your news. News is so important with the market. Okay, once you guys start understanding the big overall picture of what HFX is, which is just banks and hedge funds trading your money or trading money back and forth, that gets, you know, pushed up or down depending on greed or what's going on in the world. Okay, so like the Ukraine-Russian war right now, that moves the market a lot. Okay, so paying attention to the news is going to be very important. So if there's news going on, you're not going to want to trade. This live charts at co.uk/currency strength, this is going to tell you the strengths of the currencies that you're trading. And then tradingview.com/chart, that is where you're actually going to be marking up your charts. Then we also have this compounddaily.org calculator. This is going to give you a goal plan. So you can put in, you know, your starting amount, what you're starting with your broker, and then it'll give you what your daily goal is, and then you can put in like your 90 days, and it's pretty cool to see, you know, if you follow your goal exactly, how far you'll be in 90 days. Okay, so first thing we'll go over Forex Factory. Okay, this is your news. This is going to be your news. So is today May 4th? Yes, it is. Sorry. So over here, it's going to tell you the date. It's going to tell you the time. So you can click on this right here, the time. Okay, and then you can change it to whatever time zone you're in. Okay, so if you're somewhere else and it's not, it should already line up, but if it's not, you can go in here and change it. Okay, This has your currency pairs, and then here are the folders. Okay, so each folder means something else. So gray folders right here. Gray folders mean it's a bank holiday, or that currency pair is closed for the day. It's not going to be trading. So gray folders are usually all day. So you wouldn't want to trade that pair that day. Doesn't mean you can't, but it just means that it's going to be more low volume because it's not trading within the markets. So it's going to be low volume. So red folders mean it's a pretty severe impact onto the market. Okay, so if it has a red folder, I'm definitely not going to want to trade that pair because it can have spikes up or down in the market. It can, you know, even if you have the perfect trade setup, it can knock you out because there's going to be big movements within the market that probably aren't going to go your way because we don't know what's going to do. So severe is red. We don't want to trade 30 minutes before or after this time. 30 minutes before or after this time. So we wouldn't want to trade, you know, at 2 p.m. or 3 p.m. any USD pairs. Orange has moderate impact. Okay, orange folders have moderate impact. Same thing. We don't want to trade, you know, half hour before or after. And then yellow is not. It's you know, mild. It's mild news, but it can still definitely affect the market. If you want to know what any of these mean, you can go over here to this folder where it says detail. You can open it up. It'll give you a little brief summary of what the news is. And then it will tell you the history of the same news release in the past. They'll tell you actually how it affected the market, what it was forecasted to do in the market, and then the previous forecast. Okay, so you can look at all of that if you desire. I don't know how to grab detail. There we go. Okay, so that is where you're going to look for the news. Okay, you want to look at all that. Right now it is NFP week, which is non-farmers payroll. It happens once a month at the beginning of the first Friday of every month. So this Friday would be NFP week, and it affects it all week. Pretty much what it is just talking about, you know, it's just a bunch of bank news pretty much, and how the banks are being affected with inflation and blah, blah, blah. So that's going to affect the market. So that's once a month. So we always do low leverage or don't trade on NFP week because it can go total opposite way. Okay, so these are all the planned news events. Tons of news during NFP week. Okay, ton of news. So be careful of that. And then over here, right here, this is latest stories news. So these are unplanned news stories. So if you ever see something like going crazy in the market, you can check out here and be like, okay, what just happened? News just dropped or what? You can look over here and you can see the impact and see what happened. Correct. During that time. So if USD, any USD pair has, you know, news like this, I wouldn't trade it from 7:45 to 8:45. Any USD pairs. Does that make sense? Okay. All right, so there's that. And then up here, I have my session times. So over here, it's usually, this is going to be way down here somewhere, but you can move it up. So these, once you click over, you can rearrange this however you want, however you want to see things first. So you can move these up or down. You can even close out of them if you don't want them there. But I like this having up there so I know exactly whose session time is open right now. So any overlaps within sessions are a good time to trade. It's just going to be more volatility. London session, a lot of people like London session because it has the most amount of money movements. It's the biggest session, so there's most volume within the market during London. And then also this London and New York session, that's really the most ideal trading time for most people. So you can, you know, trade at all those different times, see which ones you like best. Some people don't like a lot of volatility, so that's That's on you. Gotta figure out what you like. Okay, so that is Forex Factory. Any questions on Forex Factory? None? Okay, perfect. So the next one you're gonna want to save is currency strength. Okay, the currency strength is going to be important so you can see who has better strength to go in for a trade. I will go over that in a moment, but you need to refresh this each time. They also have an app. Okay, there's an app called Currency Heatwave. It is a purchase in your app store, but it's called Currency Heatwave. It's pretty great app. It gives you like live and more accurate, precise strength within the currency pairs. Okay, but this is just telling you who's stronger. So the more bars, the stronger they are. Less bars, the weaker they are. So say I was going to trade GBP USD. I was trading GBP USD, and I want to know who's stronger. I would see that GBP is stronger than USD. So I would be looking for calls. Okay, so if the first pair, the first currency is stronger than the second currency, write this down, this is important. If the first currency pair is stronger than the second pair or second currency in your pair, you will be wanting to look for calls. It will be having an upward momentum. Okay, the first pair is stronger than the second pair, you will be looking for calls. If the second pair is stronger than the first pair, you'll be looking for puts. Okay, you guys get that? I'm gonna write that out. First pair stronger. Look for calls. Okay, so there's that. You can look there for your currency strength, but you do need to refresh it every time. It does not automatically refresh. Yes, yes, Tisha. Okay, and then the last one that is pretty important, we have our trading view. Okay, I will go over that in a little bit, but I want to go over some basics before we get into our actual charting. All right, so those are the links. All right, so the next thing that's very, very important, guys, you need to have a goal. You need to have a plan before each trading session, okay? So what I do is I do this, okay? This is how I mark my trades. So before each session, I can even use a piece of paper, or you can buy an actual trading journal. I can drop the link if you guys are interested for Amazon, and it's a little trading journal they have set up, but you can honestly just use a piece of paper. So what I do is I write down the account balance of my broker at the beginning of each trading session. Okay, so say I'm starting with 350. Okay, so then the next thing I'm going to do is write down my goal for that day. So your goal per day should be no more than 2 to 10%. Okay, 2% if you're a new trader, make that very obtainable. 10%, it may be a little bit harder, but it's definitely manageable. So what I would do is say my goal is 7% each day. So I'm going to take my starting balance, which is 350 times 7%, so 0.07, which is $24.50. So that's my goal to reach for today in trading. I just have to make $24.50. Doesn't seem that hard, right? And then next, I'm going to write down what my risk is. So my risk is what I'm willing to lose that day, okay? It should never be more than 1 to 2% of your total account, okay? This is how you're gonna minimize loss and minimize, blowing your account. So I take my start balance, 350 times 2%. That's what I'm willing to lose for that day. So 350 times 0.02, $7. Okay, that's what I'm willing to lose. And then I always write down what my amount is going to be per trade. Okay, so your trades should not ever be over 1% each. Okay, this is going to help, again, not blow your account. So say, you know, I have a $100 account and I'm doing 10 trades or $10 trades. It's only going to take me 10 losing trades to, you know, blow that account. So if you have a $100 account, your trades should only be $1. Because then you're going to have to lose 100 trades. Okay, so this is important to help your account grow. And it'll give you a plan instead of just going in, you know, I don't know, I'm just going to keep trading. It'll make you be a more disciplined trader. Okay, so I'm going to go over compounding on the next slide. But if I use compounding in this plan, I would only need 4 winning trades to make my percent. Okay, I'd only have to take 4 winning trades to win. Yes, no, not, it would not be, because it's only 30% of your first trade. So say my trade was $10, then it's 13. So that's risking me at, you know, 1.3%. But you are closer to that 2%. Okay, so that is how I write my journals. And then compounding. So compounding is going to get you to your goal a lot faster. Okay, it'll get you, yep, no problem, Eddie. So compounding, what does compounding mean? Because you'll hear Alex say it. All right, so say your first trade is $10. Okay, first trade is $10 and you're trading with a, so if you lose $7, yes. Yep, if you hit your risk, you're done for the day. Wait for the next day and then you start over. So that will help you, you know, minimize your losses. Once you hit that risk, you're done. So compounding, say your first trade's $10 at a 70% payout on that pair. So you get $17. Okay, you win 17. Next trade, you're going to go in, instead of trading 10, it's going to be 17. You're just taking your winnings plus your $10 in for your next trade. Okay, so 17. You do that same pair, you win off of 70%. Now you're at 28.90. Okay, now you're at 28.90. You're doing it again. You're going to go in for your next trade at 28.90 and say you win 49.13. So if you add all those up, it'll be $95. And you're only risking your initial 10 because you never went back into your other money because you're just going off of that 10. That's all you're risking. That makes sense, guys, on how to compound. So you just take your initial trade plus your winnings each time. So you take your winnings plus, yes, awesome. So that'll help you get to your goals much faster. And do less trading once you compound. You're only risking a small amount, compounding it. The only thing that does suck, if you say lose this last trade, then you have to start over. Okay, so say you win this or lose this last trade, then you're starting over. Okay, so just be patient with it, take good trade setups, and then compound, and you'll only have to take 3 to 4 trades a day. Okay, so that's compounding. Now we're going to get in, but what if I need to roll over? So if you roll, oops, hold on 1 second. So if you roll over, then it'll, and you win that trade, then, you know, you'll have more. So you'll just add that into whatever your goal is. But say you lose. So if I lost, you know, I rolled over at this initial 10 and I lost, it would just be that $3 extra. So if you lose it and you go back in, it'll just be less. Okay, so I would go in for $7 now. Okay, hold on. What if I need to roll over? What if one loses that trade? That's you made up that goal. So you just start over. You'd have to start over. So percentage loss. Yes. So you decide what your goal is going to be. Okay, you are going to be deciding what your goal is going to be. So you can decide, you know, I wouldn't recommend anything less or over. So 2 to 10%, you can decide what your goal will be, and then stick to that. So I just chose 7%, and then you're going to do that, and then you risk 1 to 2%. But yes, you do that by your starting balance or whatever is in your account at the start of that trading session. Does that make sense, guys? Does that answer your questions? And yeah, I don't roll. I can't roll. Actually, I use pocket options, so I don't roll. So it works well. Right. All right, now we're going to go into market phases. Okay, we're going to go into market phases. There are 3 different ways the market moves. Okay, a trendy market, a consolidated market, or a sideways, and then a downtrend. Okay, and then there's expansion. So a trendy market, an uptrend, is going to make a low, a higher high, a higher low, a higher high, a higher low. Okay, and it's going to be going in an upward. Price is going to continue to move upwards, but price will always have a pivot or a retracement or a pullback, however you want to call it. Yep, you can't roll either if you're using pocket options. So make sure you have your timing right. Sorry, but a trendy market. Okay, so this would be a trendy market. Price is continuing to move up. So that's an uptrend. Downtrend, you got your high, you got your lower high, your lower low, your lower high, your lower low. Okay, I'll go over that in a second, what that means. And then consolidation. Consolidation is price pretty much ping-ponging off of, you know, a certain area. So this area and this area, it's just going back and forth. It's ranging between those 2 areas. Then we have expansion. Expansion is where it's breaking out of, you know, consolidation or a trending market, has these big moves. So this right here moved outside of that ranging zone. So that would be expansion. We wouldn't want to look for trades within this, okay, because it has no real pullback. So we wouldn't want to trade within expansion. Anytime you see those huge moves within the market, don't trade within those areas. Wait for it to settle, see what it's going to do. Okay. Right. So how I mark my charts is from pivots. Okay. I use pivot points. So what is pivot points? They are simply a change in price direction. Okay, it's a change in price direction. So see how price comes up, goes back down. That's pivot. That's a pivot. Price comes up, goes back down. Pivot, pivot, pivot. You guys see that? So I always look in the past for a nice pivot. Okay, I look in the past for a sharp pivot. I mark it. Why do we do that? It respects that area. So look at this pivot, mark that one. It respected here, went back down. Okay, this pivot here, mark that. They respected it here, 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 here. So those are like 5 different trade ideas or trade areas that you could be going in for potential trade. Okay, yeah, so pivot is literally just a change in price direction. So you see it moving up, green, 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 green. Okay, now it's moving down, red. Okay, it's just a change in price direction. See it coming up, going back down. There's micro and macro pivots. Those micro pivots are going to be those small change in direction, and the I'm sorry, micro pivots are the little small ones that are a little bit harder to see, and the macro pivots are these bigger ones. You see it come, you see it change in direction, go down. I'll show you how in a moment on TradingView to look at it with line chart. Yes. Oh crap, sorry. I used the scroll button. Okay, so this is pivots. Okay, does that answer your question? Do you see it? I'll show you on TradingView how, if you don't really see it, how we can get you to see it a little bit easier when you go on your line chart. Okay, so those are pivots. So like I said, look for pivots in the past, strong pivots. So strong pivots 2 are what we call a double top or a double bottom. It's where price opens and closes that exact same area. Tweezer top, tweezer bottom 2, you'll hear them. Those are really nice, strong pivot areas. Okay, so pivot. So we mark those pivots. Now, we mark those pivots in the past. Look over here how much it respected, and then it can break through, act as a support or a resistance. Okay, so right here it was a support, it broke through, but then it came back, retested, it acted as resistance. Same thing over here, acted as a support. I don't know how many times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, it was a lot. Okay, so this was a really nice support area, but then it broke through, retested, acted as a resistance. Okay, you guys see that? You guys see that? That's why I like pivots. Okay, because it respects those areas. Any questions on pivots? No. No? Cool. Moving on. So this is how you identify trending markets, okay? You're going to want in an uptrend, those pivots, okay? This is where pivots come in as well. So you're gonna look for these pivots on a higher high and a higher low. So say price starts here, comes up and makes a pivot. That's your first higher high. Okay, that's your first higher high because price came up here and then it pivoted down and it made a higher low. So your lows are going to be on the other side and your highs are going to be on the upper side. Higher high or lower high or pivots. Yep, they're pivots as well. They're just marking, you know, where they are. So you want, on an uptrending market, you want the highs, which will be on the outside, to be higher than the previous high. Okay, so this is the first high that it made. Then it made this next high. This high is going to be higher in price than this previous one. Same thing here, as it moves up. You want this price to be higher than that previous one. Okay, same thing with the lows. When it makes those lows, you want those previous lows to be higher than that previous one. Does that make sense? Do you guys see it? Okay, so how you would be looking for it to not be a trend anymore or a trend reversal is you're going to wait for that break of structure when it no longer makes a higher high or a higher low. Okay, so right here, did not make a higher high than this one and made a lower high. So that would be an indication to me, okay, looking for a trend reversal. I don't want to take this for calls anymore. I want to wait to see what it does. Okay, so it broke that, broke it, made a lower low, made a lower high. That trend is no longer valid. But what you can do is you can still mark those pivots, and then price will usually always come back to retrace it. Okay, so on that previous uptrend, now you can take it for a sell on the downtrend. Okay, it'll usually come up to that last higher low, or higher low, to retest before continuing downwards. So that's another way you can take these trades. Okay, and it's just opposite for downtrends. A lower high, lower low, lower high, lower low. All right. So this is an actual live chart of that. Okay, so we have this first low, then we have a higher low, or this is our high, then we have a higher low because price is higher than this one. Then we created a new high because price is higher than this one. Okay, and then created new lows, new higher low, created new higher high. But then what happened? So we drew our trend line, right? Drew our trend line, we see it broke. It did not create a higher low, it created the exact same. Okay, so price stayed the same. It created an equal low. So that would be an indication to me, okay, price may start reversing. And what did it do? Came up, did not make a higher high than this one, and it retested my trend line. So I could have taken it here for a sell. Okay, I could have taken it here for a sell. You guys see that? See how those reversals can work, even though it broke out your trend line, you can still take it for a trade. Okay, cool. So how to draw trend lines, okay? How to draw trend lines. So a trend line is not an actual trend unless it has 3 touches. We can do preemptive trend lines, but it is not a true trend until it has 3 touches. Yes, Eddie, what do you want me to go over this again? So after this first breakout, okay, or that break of structure of that trend line, price will usually always come back up to test the back end of that trend to go, and now usually a downtrend or a consolidation. Okay, so break out of that, then price will come back up, test this area before selling back off. Does that make sense, Eddie? Do you see that? Okay. Okay, so trend lines, like I said, you want it to touch 3 times. Okay, in an uptrend, you want your trend line to be below, okay, because you're looking for calls. So you want it to come, you're waiting for it to come back down here, give you confirmation, or if you're a preemptive trader, that's fine too. Wait for it to hit this trend line, then go in for a call. Okay, you want price to come down to go back up. Come down, go back up. Come down, go back up. Okay, so uptrends, you want the trend line below because you're looking for calls. Price, you know, is moving up because it's in an upward direction. Okay, downtrend, you're looking for sells. Downtrend, you're looking for sells, and then your trend line would be put above it, so it would be opposite trend. I'll show you again. I'll show you once we get on the live charts. Okay, and then I personally like to use the candle wicks. I go wick to wick on trend lines. I don't like to hit the bodies, the real actual bodies, because those wicks on smaller time frames are going to be bodies and it can allow you to get spiked out. Okay, so below now. Okay, perfect. All right, you guys got that, how to draw trend lines. And I won't, again, I'm going to show you this all on there. Okay, so now I'm going to mark up my chart really quick. All right, drawings. So I do top-down analysis, okay? I do top-down analysis. We want to look at the bigger picture and then go down to the smaller time frames to get those smaller details to take a better trade entry. Okay, so overall, what we're looking at is at the day. What I do is I track price from pivots to closest to current price. So I see this pivot up here. Okay, I see this pivot up here. I'm going to mark that. And then I'm going to find a pivot to trap it over here. I like that area. Okay, price came all the way up here, then it rejected off of it. Okay, price came down here, rejected before moving. Price came down, rejected before moving. You can look in the past, see if it's respected it in the past. It did. Okay, it acted as a support before for here. For now, it is a resistance. Same thing here, acted as a resistance, acted as support, resistance. So I like those areas. Okay, I'm gonna mark these as my daily. okay? And then overall, look at market structure. What's it doing? So it was kind of in a consolidation phase. Now did a little expansion. Maybe now it's going to start going in the uptrend. Okay, so at every time frame, I'm going to be looking at market phase and then trapping price. So now I go down to my 1 hour. I go down to my 1 hour. And again, I'm just finding pivots closest to current price. So really like this area, okay, price came down, rejected, price came down, rejected, down, rejected, rejected, and then it acted as a resistance over here. So I really like that for my hourly. And why do I mark them at different time zones? Because then I know that it's a strong support resistance. The higher time frame, the higher or the stronger that support and resistance is. So if price does reach that, I know it's a pretty solid area to take a trade. Okay. And then I like this area. Came up, rejected, 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 rejected. Go in the past even more. Wherever price was there. Has not been there in a very long time. But you can go as far back as you would like. Okay, I'm not going to do that for sake of time. But that would be my hourly. And now I see, you know, it did go on this uptrend, but it broke that. Okay, it broke that. It's creating that equal low right now. So I'm not going to draw a trend line. But each time frame is going to have different market phases. You're going to have consolidation with consolidation, or consolidation with a trend lines within trend lines, etc. Okay, it may look like an overall uptrend on the 1 hour, but then you go in the 1 minute and may look like a downtrend, but it's just coming up to meet that. Okay, look at overall picture. That's why it's important to know overall where does the market want to move, and we're in these smaller time frames. So now I move down to my 5 minute. Going into my 5 minutes. Okay, and I'm trapping price once again, just trying to find those pivot areas closest. I don't always mark my 5 minutes, but those prices are pretty far away, so I want to find some pivots even closer. I like that area. It's respected it pretty well there. Okay, and guys, when you're doing this, don't look for the perfect, support and resistance. There's always going to be candles that go through it. Just look for the one that it's respected the most. What happens to the wicks above? What do you mean? So like these, it's always going to, have something that broke through, but it came down and retested that area the most too. Does that make sense, Tina? That answer your question? You're always going to have wicks or bodies that are going to be outside of that. There's not going to ever be, a solid support or resistance that doesn't break that. Okay, so 5 minutes, I like that area. And that was my other 5 minutes. Okay, now I go down to my 1 minute to look for actual an entry. Sorry, I'm running out of time. This is my first time doing this class with the slideshow, so I'm trying to be detailed, but tomorrow we can finish this class up too and then go into the more advanced stuff. You don't have to respect support and resistance, but anytime it's a support, it breaks it, usually comes back and test it as like resistance, so they can act as either one. Okay, so say, so this broke through, okay, it broke through that, but then it came back and acted as a support. Okay, so that's what I would be looking for. Okay, does that answer your question? Thanks, Timothy. Oh wow, we almost have 80 people in here. I'm shocked. So that is how I would be looking for my trade entry now, my 1 minute. I like trending markets. So I would be wanting to look for a trend. I'm just gonna do this so that you guys can see what I would look for. Okay, so say price is over here, don't pay attention to that. I'm just doing this for sake of finding you a trade entry. Yes, Jacob, I do the daily, the hourly, and the 5 minute, and the 1 minute is where I'm looking for my actual trade entry. Okay, so we see these little pivots right here. Okay, so I would be marking where current price is. I would be marking a few pivots above and below where my price is. Okay, this is, I should have done. I'm gonna reverse this. I'll set it up tomorrow to show you a better like trade entry. But what I would be waiting for, okay, or how I would be marking my 1 minute is I find those pivots, the smaller pivots, where current price is, waiting for it to come down, hit my trend line and my support and resistance to go in for a trade. Okay, so this would be my ideal trade setup. I found that pivot, like it, price came down, hit it and my trend line, but I would not go in yet. I would be waiting for this confirmation candle right here. Okay, so price came down, it hit it. I would not have went in as soon as it hit it. I would have waited for a confirmation candle. So this is a bullish engulfing candle. Okay, it has no wick, which shows me that it's not liking price to go down. Okay, and then it has a big wick going upwards. It's engulfing this whole candle below it or before it. Okay, so this candle body is completely engulfing this one. That means that it's engulfing. Okay, so I would have entered the last 10 to 20 seconds of this candle, of this confirmation candle. It doesn't matter if price was all the way up here, all the way down here. I don't care where price is. I would go in for the last 10 to 20 seconds of this candle, and I would go in for a 2 minute trade. Okay, so say I even went in all the way up here. I entered it for 2 minutes. Okay, this is 1 minute, this is 2 minutes. I would have cleared that by a mile. I mark all my pivots on every single time frame. So you'll know if the market's acting a little crazy is if it is super, what we call like wicky or huge bodied candles. So USD has a lot of news today, correct? Let's look at it. Okay, this is on the 1 minute time frame. Quite a bit of big wicks. It's not absolutely terrible. Trying to find like a crazy looking pair so you can know what to stay away from. Of course, it's not going to show, you know, nothing too crazy, but I mean, Euro USD, these are kind of longer candles. Okay, the wicks are kind of long, so you don't want to do like pairs that are, you know, crazy movement. Crazy movement are like huge wicks or movement that just doesn't make sense. That's what you want to stay away from. Repeat the confirmation candle. Yep. I don't even know what pair I was on. Hold on. Didn't even know what pair that was. Is that it? Nope. GJ? Perfect. Thank you. Okay, so the confirmation candle. Okay, I would not have went in as soon as price entered here. I would be waiting for a confirmation candle. So I would want this, I would be waiting for this green candle showing me that price is going to reverse and go back upwards. Okay, I wouldn't want to go in here because price can still go down. Okay, so I'm waiting for that reversal pattern. Okay, whether it be, you know, candlestick pattern or a bullish engulfing That's what I would want. So I would wait for this. I would wait to get this candle. Once I have this candle, I would enter on the last 10 to 20 seconds of this candle. If you guys don't know where to look for that, okay, let me show you right here. So right here, okay, on that current candle, right here, it tells you the time. So I'd be waiting for the last 10 to 20 seconds of this candle, no matter where price is. No matter where price is, if I'm all the way up here, all the way down here, I would enter it and go in for 2 minutes. Got that? Perfect. So that's what I would be waiting for. Okay. So that's what I do to look for my trade entries. Like I said, I like trending markets because you already know which way the market is moving. If it's going, in an uptrend, you're going for a buy. If it's downtrend, you're going for a sell because price is moving down. I don't like consolidation trading because you never know when it's going to go outside of that range. It doesn't give you any real like heads up, like, hey, we're leaving. No, it just drops off. I don't do fixed time. I just do 2 minutes. So for preemptive trading, I don't do confirmation candles. So preemptive trading would mean like it hit that area. As soon as it hits your area, you're going in at that price. Okay. And you're going in for that 1 or 2 minute. This like consolidation trading, you can't use a confirmation candle. You'll get spiked out. So consolidation, you would have to be like preemptive trading, which means that you go in as soon as price hit there. Okay. All right. So went over that. All right, and then you should always have objective trade entry reasons. Okay, these are going to be like your set of rules to what to look for to go into a trade. Okay, you should have at least 2. Okay, at least 2. So if you're newer and you're just starting, it should be hitting your support or resistance and then like your currency strength. Okay, the bare minimum. These are just some that I look for. I don't always have to use every single one, but I want it to hit my support or resistant level or my pivot points. Okay, I do technical indicators confirmation with my confluence. So I like the EMAs or divergence. I'm going over that tomorrow. The candle pattern confirmation or your candle confirmation, your engulfing bearish bullish candle. It hit my trend line. If you are doing like a trending market, trend is going to trump currency strength. Okay, market structure is going to trump currency strength. So do I use currency strength? I don't. I go over market structure. Yes. So confirmation candles are best with trending market. This is for HFX. This is HFX class. Okay, so you want to have some of these rules before going into a trade. You want to set up your own, can be, whatever you personally look for, but you want these. These are going to make you a more disciplined trader. It's going to make you patient, and it's not going to make you chase the market. So you're not going to use currency strength at all for Forex. Forex is market phase based. Because it's longer trades, currency strength changes too fast that it's not going to matter. I hope this wasn't too much information, guys, and you're absorbing it. I do this every Wednesday and Thursday, but this is my first time doing this. I'll finish this class up tomorrow. If you guys can join me again at 5 a.m. Eastern, I'll finish this call up. And then we'll go over to London session right now, take some trades. All right, thank you guys so much for joining me, and we will see you in a moment.
Thank you, Kylie.
Welcome.